Hey everyone, and welcome back to the channel. Have you ever tried to rent an apartment, get a cell phone plan, or even just finance a new laptop, only to be told, sorry, you have no credit history? It's a frustrating catch-22, right? You need credit to get credit. It feels like trying to get a job that requires experience, but you can't get experience without a job. Well, today, we're going to break that cycle. I'm going to show you, step by step, how to build your credit score from absolute zero. This is the ultimate beginner's guide. So if words like FICO, credit bureaus, and utilization rates sound like a foreign language, you're in the exact right place. By the end of this video, you'll have a clear, actionable plan to go from a credit ghost to a financially empowered individual. First things first, what even is a credit score? Think of it like a report card for your financial life. It's a 3-digit number, typically ranging from 300 to 850. That tells lenders how reliable you are at paying back borrowed money. A higher score means you're considered low risk, which makes it easier to get approved for loans, credit cards, and mortgages, often with better interest rates. A low score signals high risk, which can lead to denials or very expensive borrowing costs. In the US, there are 3 major credit bureaus: Equifax, Experian, and TransUnion that collect your financial data and use it to calculate your score. The most widely used scoring model is the FICO score. So, how is this magic number calculated? It's not a secret formula locked in a vault. FICO is actually pretty transparent about the key ingredients. The biggest piece of the pie, a whopping 35%, is your payment history. Do you pay your bills on time, every single time? This is the most important factor, bar none. Next up, at 30%, is your amount owed, or what's often called your credit utilization. This is the percentage of your available credit that you're currently using. For example, if you have a credit card with a $1,000 limit and a $300 balance, your utilization is 30%. A lower utilization is always better. Experts recommend keeping it below 30%, and ideally below 10% for the best score. The third factor, at 15%, is the length of your credit history. This is simply how long your credit accounts have been open. The longer your history, the better. This is why it's often a bad idea to close your oldest credit card, even if you don't use it much. New credit, which accounts for 10%, looks at how many new accounts you've recently opened or applied for. Applying for a bunch of credit cards in a short period can be a red flag to lenders. Finally, credit mix, at 10%, considers the different types of credit you have, like credit cards, student loans, or an auto loan. Having a mix shows you can manage various types of debt responsibly. Don't worry about this one too much when you're just starting out though, okay? Theory class is over. Let's get to the actionable steps. How do you actually start building credit when you have no history? The first and most common entry point is a secured credit card. This is a card designed for people in your exact situation. To get one, you make a small, refundable security deposit. Usually a few $100s. That deposit then becomes your credit limit. So, if you deposit $200, you get a $200 credit limit. You use it just like a regular credit card. Buy gas, groceries, whatever, and you must pay the bill on time each month. The bank isn't taking any risk, because if you fail to pay, they just keep your deposit. The magic here is that the bank reports your payments to the credit bureaus. After about 6 to 12 months of responsible use, your first credit score will be generated, and the bank will often upgrade you to an unsecured card and refund your deposit. Another fantastic option is to become an authorized user on someone else's credit card. This is usually a parent, spouse, or other trusted family member with a good credit history. They add you to their account, and their card's history, its age, and payment record can appear on your credit report, giving you an instant boost. Now, a word of caution. Make sure the primary cardholder is responsible. If they miss payments or max out the card, it will hurt your score, not just theirs. Also, establish clear rules. Are you getting a physical card to use, or are you just being added to the account to inherit their good history? Communication is key. A third path, which is gaining popularity, is using credit builder loans. These are small loans designed specifically to build credit. Here's how they work. You applied for the loan, but instead of getting the cash up front, the lender puts the money into a locked savings account. You then make small monthly payments over a set period, say 12 months. Each of these on-time payments is reported to the credit bureaus. At the end of the loan term, The locked funds are released to you, often plus any interest you've earned. You've essentially forced yourself to save money while building a positive payment history. It's a win-win. Some banks and credit unions offer these, and there are also fintech companies that specialize in them. As you start your journey, there are some common mistakes you absolutely need to avoid. The number one mistake is making late payments. Just one late payment can tank your score and stay on your report for 7 years. Set up automatic payments for at least the minimum amount. Do so, you never forget. The second mistake is maxing out your card. Remember that credit utilization we talked about? Using your entire credit limit screams financial distress to lenders. A good rule of thumb is to only charge what you can afford to pay off in full each month. This brings us to mistake number 3. Carrying a balance and paying interest. Credit card interest is incredibly expensive. Think of your credit card as a payment tool, not a loan. Use it for the convenience and the credit building benefits, then pay the statement balance in full every month to avoid interest charges entirely. Finally, avoid applying for too many cards at once. Each application results in a hard inquiry on your credit report, which can temporarily lower your score. Be strategic. Apply for one card you have a good chance of getting approved for, and then use it responsibly for at least 6 months before considering another. So, what's a realistic timeline? Building good credit is a marathon, not a sprint. You won't go from 0 to an 800 score overnight. Typically, after you open your first credit account, it takes about 6 months of reported activity for a FICO score to be generated. Your initial score will probably be in the mid-600s, which is considered fair. From there, it's all about consistency. With 1 to 2 years of consistent, on-time payments and low credit utilization, you can realistically build your score into the good range, which is 670 to 739. This is the zone where you start getting access to better credit cards with rewards, better loan rates, and more financial opportunities. Reaching the excellent range, which is 800 and above, can take several years of disciplined financial habits, a long credit history, and a good mix of credit types. But the key is to just get started and be patient. The good habits you build now will pay dividends for the rest of your life. Let's do a quick recap. The credit score is your financial report card. It's built on 5 key factors: payment history, credit utilization, length of history, new credit, and credit mix. To start from 0, your best options are a secured credit card, becoming an authorized user, or getting a credit builder loan. The biggest mistakes to avoid are late payments, high balances paying interest, and applying for too much credit at once. Remember to be patient. It takes about 6 months to get your first score and a couple of years to build a truly good one. Building credit is one of the most powerful things you can do for your financial future. It opens doors and gives you options. Thank you so much for watching. I hope this guide demystified the process of building credit and gave you the confidence to get started. If you found this video helpful, please give it a thumbs up and subscribe to the channel for more content on mastering your money. And if you have any questions or want to share your own credit building journey, drop a comment down below. I love hearing from you all. Until next time, take care and start building.